They were told to invest young, that it's the smartest way to build wealth, but no one told them how. No one told them what could go wrong. And now, millions of Gen Z investors are finding themselves trapped, not in a wealth-building machine, but in a debt spiral that looks more like a casino than a financial plan. Today, we're peeling back the layers on a disturbing trend: the growing addiction Gen Z has to stock market trading, and why it's costing them everything. Welcome to 86 Dawn Finance YouTube channel, where we break down the hidden mechanisms controlling your financial life. Let's break it all down. No fluff, just the truth. 1. The obsession with trading. It started small, a few influencers flashing profits, a few viral TikToks claiming you could make $10 in a week. The idea was simple: you don't need to work hard for years. Just learn to trade stocks, and you'll be financially free. It became a movement. Between 2019 and 2023, the percentage of Indian stock investors under 30 jumped from 18% to over 45%. That's not a trend, that's a tidal wave. But when you zoom in, the picture gets darker. According to SEBI, 9 out of 10 futures and options traders in India lose money. The total loss to retail investors over the last 3 years? More than $21 billion. That's not trading. That's mass financial self-destruction. And it isn't just in India. Globally, trading platforms like Robinhood have gamified the process so much that young users don't feel like they're investing. They feel like they're playing. And when the game gets serious, many realize too late that the stakes were never virtual. 2. Real stories, real losses. Take the case of Bhuvanesh, a 26-year-old from Chennai. He borrowed money from banks and friends, convinced the stock market would make him rich. When his trades collapsed, so did his hope. He ended his life by jumping off a building. Or the engineering student who lost 4.6 million rupees without even having a job. He took loans, stole from his parents' bank account, and gambled it all away in options trading. Now multiply these stories by thousands, because for every headline we see, there are countless stories we don't. 3. Not investing, gambling. Here's the truth most don't want to hear. What most of Gen Z is doing isn't investing. It's gambling. True investing is built on research, long-term vision, diversification, and risk management. But what's happening now is impulsive, emotionally driven speculation, buying because of hype, selling out of fear. And the apps? They encourage this behavior, with colorful charts, instant notifications, confetti animations when you buy a stock. They're not helping you build wealth. They're training your brain to chase dopamine. 4. Why Gen Z is vulnerable. We need to ask a bigger question. Why is Gen Z so vulnerable to this trap? First, economic insecurity. Gen Z has grown up watching economic crises, inflation, rising student debt, and a job market that doesn't always reward degrees. Traditional paths to wealth seem broken. Second, social pressure. Social media is a highlight reel. Everyone's showing off gains. No one shows their losses. If you're not in the market, you feel behind. FOMO is a powerful drug. Third, psychological factors. Many Gen Z traders experience what's called the illusion of control. They believe they can outsmart the market. They follow finfluencers who reinforce this illusion with cherry-picked success stories. 5. The finfluencer factor. Let's talk about the new age snake oil salesmen, finfluencers. These financial influencers post luxury lifestyles and claim it's all thanks to trading. They sell you courses. They promise secret strategies. But here's the twist: most of them don't make money trading. They make money selling you the idea of trading. And for the average 20-year-old trying to make sense of the financial world, this fantasy is addictive, but it's also dangerous. Because when the reality hits, and the market turns, there's no finfluencer to bail them out. 6. The psychology of addiction. Science backs this up. Trading triggers the same reward centers in the brain as gambling. The highs are intense, the lows are crushing, and the urge to win back losses? That's called revenge trading, and it's a psychological trap. Rehab centers in India and elsewhere have started receiving young people addicted to trading. Some show symptoms of depression, anxiety, and compulsive behavior. They're not chasing wealth anymore. They're chasing relief. 7. Pump and dump. The scam game. Meanwhile, there are people who exploit this addiction. They create fake hype around penny stocks in private groups. Telegram, Discord, WhatsApp, doesn't matter. They say things like, "This stock will 10x this week." People rush in. Price goes up. Then they sell, and leave others holding the bag. This is called pump and dump, and it's devastating for new traders. SEBI took action against 50+ entities in 2023 alone. But for every scam taken down, 5 more pop up. 8. What needs to change? Let's be honest, the system is broken. Platforms should not gamify risk. Influencers should not sell dreams without disclosure. And young investors should not enter the market without understanding the basics. This isn't about regulation alone. It's about revolutionizing financial education. Financial literacy should be a mandatory subject in school. Every teenager should learn about budgeting, taxes, risk tolerance, index funds, retirement planning, emotional control in investing. If we teach kids how to dissect Shakespeare, we can teach them how compound interest works. 9. The role of regulators. SEBI has started pushing back. They've proposed guidelines to regulate financial influencers, and are cracking down on shady platforms. But enforcement must go further. There needs to be licensing for financial content creators, mandatory risk warnings on trading platforms, transparency on influencer sponsorships, and perhaps most importantly, a clear boundary between financial education and financial entertainment. So here's the truth. Gen Z isn't failing at investing. They're being failed by the system. They don't lack ambition. They lack guidance. They don't need to stop investing. They need to start learning. They don't need hype. They need habits. So if you're part of this generation, or raising someone who is, ask this. Are you investing for your future, or gambling to escape your present? Because wealth isn't built on emotion. It's built on knowledge, patience, and purpose. If you want help building that foundation, please leave your comments and questions for us. With expert guidance, step-by-step courses, and real tools to build wealth the right way. No hype, just clarity. No shortcuts, just strategy. Stay sharp, stay grounded, and never trade your future for temporary flash. Push through the delays, claim what you rightfully deserve, and don't get hypnotized by empty promises. Now tell me, have you received your March payment yet? Are you still waiting? And what do you think about the Doge dividend proposal? Bold or hollow? Fair or unfair? Drop your thoughts in the comments. I read every single one. And if this video helped you understand even just a little, hit like, subscribe, and share it so others can stay informed too. Please note that 86 Dawn Finance does not offer advice on taxes, legal matters, investments, or finances. The content is intended solely for educational purposes and should not be considered professional advice. For personalized guidance, please consult your own qualified advisors. Although the information has been carefully researched and reviewed, it may not represent the latest legal or financial updates. Viewers are advised to confirm the accuracy and timeliness of the information, particularly before making any major financial or legal decisions. Until next time. Stay informed, stay empowered, and stay our 86 Dawn Finance channel.